Watching live, please type in hashtag live. Now, a lot of people watch our replays. If you're watching our replays, just type in hashtag replay just so I know that you're watching.
Property guru George Markowski from Positive Property Solution joins us now. George, good morning to you.
How are you, George?
You've got to hang out with guys like George who know the numbers. Get the real numbers, the facts. Because I can talk to you about cash flow and all those things. George is better at that than me. The thing I'm ecstatic about George, he is a hardcore teacher. He really wants you to learn.
Okay, guys, we've got 10 seconds left. Can't wait to show you a great, amazing session tonight. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Hello, freedom fighters. How's everyone doing tonight? Welcome to tonight's session. We're going to be talking to George Markowski tonight, and we're also going to have a special guest a little bit later. But just so I know that you can hear me, you can see me okay, you're receiving me loud and clear, if you could type in G2G, hashtag live, let me know that you're here. That would be amazing.
And
hi, George.
Hello, everyone. Hello,
Welcome.
everyone. Thank you. I'm back.
You were never here.
So, well, I was, I wasn't, and here I am now. So lots to talk about tonight. Lots to talk about. So the question I was asking the group today, and I was asking, what advice would you give your 20-year-old self?
Oh, I love that question. It's really great to see where you're at now and think at how much you've learned and look back and say, what advice would you give yourself? Before we jump into that, for those of you who are watching the replay, if you would like to type in hashtag replay, that gives us a bit of a gauge of who's joined us live on the session tonight and who's caught up on the replay.
Exactly, that's right, because we're watching, and if you're on the podcast, just come to the group and say hello.
Come over to Facebook. Get off the podcast. No, you can stay on the podcast.
No, stay on the podcast, because that way you've got George in your pocket everywhere you go.
Love it. Fantastic.
Now,
So what would you ask your 20-year-old self, George, if you could go back and do that?
I'm going to be sharing my screen and show you what people have said. And guys,
okay, we did a bit of an ask the audience, did we?
Yeah. And if you watch these, tell me what you'd say, and I'm going to tell you my answer afterwards. So let's go.
I think I'd probably tell myself to relax a little bit more. I was a pretty stressed out 20-year-old.
So if you look at the screen here, oh, there you go. Look at that. Okay. So
Fantastic.
Peter says invest in property. Wouldn't be putting up with the SHIT at work I'm now.
Mm-hmm.
Brendan, invest in property. Tim Allen, buy way more property and buy Apple shares. Yes. Peter,
Yeah.
I'm still in my early 20s, but the thing I keep telling myself, buy, invest as soon as possible. Dave Dove, stay focused on your goals. Don't let the small things hold you back. And look, Dave Dove's one of our members, and Dave is actually and his wife. They're going to be retiring next year, which is great.
Yeah, absolutely.
Name, don't listen to your father's financial advice. Yes. Hi, George. I don't need anyone's approval. Accept myself the way I am. Not associated with people who do not see my worth and finding positive property in my 20s and not 40s. Beautiful. Thank you, Kathy. I think Kathy's online. Hello, Kathy. Craig, be independent. Independent meaning free from grids, pumps, service charges to properties. There you go. Start lasering my hamstrings. There you go. I don't know what that means, but do not expect life to be as easy as it is. And I wrote, join me tonight, and I'll tell you. So, guys, if you want to tell us what we tell you 20 yourself, I'm very, very curious.
Look, there's a lot of good advice there, but the main takeaway I'm getting is that everyone wishes they had invested in property sooner.
Yeah. So when I was in my 20s, I was supposed to go to university. And because my parents drummed it into me from a young age, you have to go to uni, you got to become a doctor or a lawyer or something like that, or a scientist. And I actually loved science. Science I just loved, and what I loved is I wanted to be a scientist. So I waited to get into uni. I got my letter. I got accepted, which was great. And during my holidays,
Got a bit of a dodgy connection there. Let's hope George comes back online. I don't know if I'm coming through and you're still receiving me. But our internet has been a little bit choppy here. George and Christine are looking well relaxed and tanned. Well, maybe George is looking tanned. I don't know about myself. These lights aren't really doing me any justice. So hopefully I'm still coming through. I know George looks like he's pretty frozen there. And we're back to just me. Welcome to the Christina Markowski Show. For those of you who don't already know me, I'm Christina Markowski. And welcome back, George.
Hey, Christina, you look as beautiful as ever, by the way.
Thank you.
Right.
Thank you very
So
much.
in my early 20s, I'm going to start again. I loved science. I got into uni after doing matric, and I was waiting to get into uni. And while I was waiting for those few months, I actually decided to get a job selling teddy bears. And I sold this guy a teddy bear, and then he came up to me, and I'm like, sorry, mate, you already bought the teddy bear. He goes, no, I want to offer you a job. And I said, I'm not interested. I'm going to go to uni. He offered me a job as an art dealer, $2,000 a week. And I was 18.
Wow, that would have
And I
seemed
was
pretty
like,
attractive.
Yeah, so I'm thinking, you know what? Stuff uni. I'll do this for a year, and then I'll go back to uni. But also,
So you wanted to have a bit of a gap here, right?
I wanted the gap here to make some cash. That way,
Right.
I just imagine myself cruising to uni with a nice car, nice threads, rocking up instead of, the way I was at the time with a car that was a clapped out car and nothing else.
Instead of catching a bus.
But also, I mean, I've always was interested in business. Even though I love studying, but the idea of working in a company at a desk and all that, in some big, I thought, wow, that's going to be 40 years of my life. But I thought, that's the way it is. I'll find a science job. I'll be working in some office doing some science, and then, get married and cruise around. Anyway, so I got offered this job. I come home and said, hey, I got this job. I might do this. My father, he went nuts.
Wow.
He wasn't happy at all. And
That
he
would
said,
have been
look,
pretty tough to handle.
well, he said, look, he goes, if you think that, going and getting a job and because I always talked about being in business. I talked about Think and Grow Rich. I read that book and I was into that sort of stuff. He goes, forget all this Think and Grow Rich stuff and all this other stuff that you're doing. You need to go to uni and get a job, get a job in a bank, get a job as a lawyer or a doctor, and just do that. And then you'll have security. Because he grew up in World War II.
So he's very old school thinking by the sounds
very
of
old school. He was so against it. He didn't like my positive thinking or me going outside the norm. You know what I mean?
Didn't even like positive thinking.
No, didn't like it. He just said that's stupid.
That's pretty fun.
Yeah, because I was saying, look, you think positive. He goes, positive thinking does nothing for you. I go, sure it does. I'm going to think positive. I'm going to create the life that I want. I'm going to be successful.
Absolutely.
And he goes, oh, no, you're not. You can't do it by thinking positive. You've got to work hard, get a good job, and just work really, really hard.
He can bring out a new book. It's called Think Negative, Get No Results.
Anyway, so I know where it came from. It came from caring about me and scared of the outside world, but also getting drummed into him. That's the way to do it. And he wanted me to do better than him. He said, you don't want a job like me, because he was working at Holdens.
Yep. So he was working in a factory. So for those of you who don't know, Adelaide had a big Holdens factory where they made all the cars, and that supported a lot of the blue collar workers, majority of them actually.
Absolutely.
My father worked there as well, and it shut down pretty much overnight, and most of the people were just left without a job, bang, overnight.
Exactly. So the fact of it is, I wasn't planning on working in a factory anyway. I already started a few little businesses, side hustles while I was at, while I was in primary school and high school. So I had a bit of experience. I mean, I used to negotiate for the family, get us good deals. So I was already into it. Anyway, it got to the point where every time we'd have dinner, he'd go, you're a loser. You're going to be a loser if you don't go to uni. And I was having it. So luckily, with this job opportunity, I got to move to Sydney. And I tell you what, leaving home, even though it was scary, because imagine being 18, moving to Sydney, where you're looking around at big buildings, and I heard people get stabbed and shot, and I was so scared. You know what I mean?
It would be very scary, but at the same time, you're getting out of that negative environment and you're getting into a new environment, being surrounded with different people, and you're going to be working in the industry where everyone's sort of got the same goal as you.
Totally. But the thing is, you cannot become an adult by living at home.
No.
Getting out of home and learning to pay bills and all that, even though it's hard, get you out of your comfort zone is the best thing. So if I spoke to my 20-year-old self, my 18-year-old self, I would have said, look, stick to your guns, think positive, get out of your comfort zone and just make it happen. And I was very fortunate that I did that anyway. You know what I mean? Because I could have got beaten down by everyone saying, go to uni, do what's safe. But you know what? Instead, I did what I loved, did what I wanted to do, wanted to get out of my comfort zone, wanted to, doing working for an art gallery was amazing. It was so much fun. And I made good money. So I came back 3 years later and I made a lot of money.
Back to Adelaide from Sydney?
Yes. Flew back to Adelaide. I had all the most expensive clothes. I bought myself an old Jag, and I was doing quite well for a 19 for a 20-year-old.
Because you didn't go to uni. You went.
So I was a 20-year-old making, 1 or 2 grand a week back in the 90s, early 90s. And my friends at uni were like eating baked beans. And nothing wrong with that because they ended up getting good jobs. But I just did the fast track and it was amazing. And so I think at the end of the day, if I talk to my old self, I would say, hey, have the courage to do what your heart desires. Have the courage to follow your heart. And don't worry about what people say because you only live one life.
That's right.
What I'm doing, I'm not just saying that about me. I'm saying it to everyone listening right now. So you might be thinking I'm talking about me, but I'm also talking about you. That doesn't matter if you're 20, 30, 40, 50. It's never too late. But I'm saying, look, have the courage to do what you love. Have the courage to invest in property. Have the courage to ask that person that you're interested in, ask them out on a date. I mean, I asked you out and you said no.
That's right. No? Act like you're not going to fail and then think about what you really want to do.
Yeah. And me moving to Sydney gave me extraordinary confidence. And it made me bulletproof. And getting out of your comfort zone is great. When you're on your deathbed, you're not going to look back and go, oh, I'm so glad I played it safe. There's no way.
You're going to regret the things that you don't do, not the things that you do.
Totally.
And you won't have that, oh, what if I had done this or that when you're there? You can look back and go, I did it.
Right. Even
I had the courage.
That's right. See, the problem is school teaches you to be safe.
Yes. They
teach you to follow the rules and be safe. Now, you don't learn. Even though you go to school to learn, you're not really learning. All you're doing is parroting. Mm-hmm. When you learn when you make mistakes. But at school, when you make a mistake, you get in trouble. See, I'd like to start a new school where every time you make a mistake, we give you a reward and pat you on the back and go, well done. Seriously.
That wouldn't be the real world, though, George.
Well, it is the real world. It is the real world because you think about it.
You don't get a reward, though, but you get the learnings for every time you make a mistake.
You get rewarded.
You can build on that knowledge that you learn.
Yes. So I wasn't an expert investor when I started.
Surprise.
I wasn't excellent at business.
You were a pioneer, essentially. You had to, find the path. You had to get out there with your machete, cut through all the weeds, all the overgrown path, and clear that path so that everyone else behind you could have a clear path and a shortcut.
That's right. But what I did is once I started on my journey, I found people that had success, but I found people that had the lifestyle that I wanted. See, I didn't want to go, I went to this financial plan. I went to his office and the guy's wearing a 3-piece suit. Right? Working in office 80 hours a week. How is he going to teach about financial freedom? That's a bit like asking someone overweight and unfit to teach how to be fit and underweight and fit and look good. You can't do it. So I ended up on a quest, and there was a guy called Nick from Melbourne, and he was living in Florida, wasn't working. He had a house in Florida. He had one in Morocco, one in Melbourne, right? And the guy cruised around having a ball.
Is this the guy that drank the apple martinis?
Yes.
And he was drinking apple martinis most days of the week.
He was in shorts.
So that's the lifestyle you want to have, if you like that sort of thing.
So what I did is I followed him and went to Florida to meet up with him because I wanted to learn from someone that had the lifestyle that I wanted. I didn't want to learn from someone that's sitting behind a desk in a suit. I wanted to learn someone that has got a lifestyle.
But also, you don't want to learn from someone who's working all these long hours because you want to have, a pretty cruisy life.
Yeah, well, if someone's working long hours, all they can do is teach how to work long hours.
That's right.
Because if they could not work long hours, they wouldn't be doing it.
They've got to lead by example.
That's right. And look, that's part of the reason I don't feel a need to wear a three-piece suit or have an office or anything like that. I don't have that urge, because I had a PR company a while ago, right? Mm-hmm. They're like, George, you can't show everyone what you do on Facebook. You're always in shorts and you're top off on the beach. You've got to put a suit on and look professional, and you've got to do this, do that. And I'm thinking, no, I don't. Why?
It's just not you, though. So that wouldn't be authentic, right?
Not me. I mean, at all. Why would I do that? At the end of the day, I am who I am.
You have to be you.
Exactly. You have to be you. And I think the beauty of it is, in this day and age of the internet, you can create a business around your authentic self and attract your authentic tribe. And it's really good.
Oh, 100%.
And see, that's where I'm going to segue onto my next topic.
Financial bulletproofing?
No, that's next.
That's the next topic.
We've got our tax lawyer coming on later, financial bulletproofing.
I'm going to teach everyone how to deflect bullets. You're going to be like Superman by the end of this session.
Let me give you the stats, okay, in case you feel despondent. The average age of a millionaire is 57.
Okay.
The average age of a US president is 55. The average age of a CEO is 54. So if you're 20s, 30s, and 40s, and you think you haven't got it all figured out, it's okay.
Great.
You got time. Doesn't matter, right? And that's the beauty of it. Now, there's been a lot going on about this Russian-Ukraine war.
Yeah, what's the latest? I've sort of switched off to all of it.
I want to tell you my take on it because I wanted to sort of, because with social media, so much goes on, right? And there's all these people saying, we should ban Russians from flying to Australia and doing this and doing that. And look, see, in World War II, people started calling sauerkraut victory cabbage, right? And referring to hamburgers as liberty steaks because they wanted to get away from that.
They associated with the country it came from,
yes,
right?
That's right, Germany, right? But the reality is only 9% of Germans actually joined the Nazi party.
Yeah, that's not a lot.
The rest of Germany hated the situation as much as the rest of the world.
Of course.
And the reality is 99.9%, 99% of Australians have got no way of influencing our government.
Mm-hmm.
Right? Also, 99% of Russians and Ukrainians have got no control over what their government does either.
Of course not.
Right? So that's why I'm not going to go hate on a population just because their government does something stupid.
It's not the people, it's the government.
That's right. But see, when the media is inflaming your hatred, the more you hate, the less you start thinking and the easier to control.
Absolutely.
Right? So what I want to do is I want to feel, I want to send love to every human harmed by the war, including the Ukrainians, the Russians, everyone else in Europe, Australia, all over the world, because everyone's getting affected by it.
Well, it's not a nice thing to happen at all.
It's terrible. And it's bad for everyone. No one wins out of it. And the point is, I don't think that the Russian people, the Ukraine people can control
the people supplying the weapons win.
Yeah.
So you've got to think about that.
Yeah. So there's going to be, these sanctions could trigger global market events.
Absolutely.
And I was recently interviewed with Martin North on his podcast, and we were talking about what's going to happen to property. He was asking me.
Martin North, where's he from, George? A little bit of background on Martin.
I was on his YouTube channel recently. I'm going to Google it and find out. I've been there a few times. He talks about property, stocks, and finance.
So he must be a bit of a public figure.
Yes, Martin North YouTube. Here we go. Came up.
Okay, so he knows about property, stocks.
That's right, exactly.
So he sounds like he's a bit of in the finance sector.
That's right. And he was asking me about what's going to happen about.
So Martin interviewed you?
Yes.
Okay, great.
So there you go.
And you gave your 2 cents on
Yes, I gave my 2 cents because what happened was, I don't know if you remember, about 8 days ago, about 2 weeks ago, I predicted petrol was going to go to $3 a litre.
Yep, you picked it.
And 2 days later, what did it do? It hit $3 a litre.
It's almost like you got a crystal ball.
And look, I call it the way I see it, and I'm generally within the trend. Sometimes you can't nail it, but the $3 mark hit it on the spot here in Adelaide. We had $3 a litre petrol. It's gone down again now, luckily. Right.
So it hit a bit of a peak and then tapered off, did it?
Yeah, that's right. So the initial sanctions, everyone went a bit nuts, and then things are becoming normal again.
Okay. What did you and Martin discuss then on the show?
He was asking me about what property market's going to go up, which one's going to go down. And I suggested that maybe Melbourne and Sydney have hit their peak.
Yes.
And they're probably going to have a bit of a correction this year.
Right.
So if you've got properties in Melbourne or Sydney, be warned, there's going to be a slight correction.
I would be thinking particularly apartments in those states.
Well,
due for a bit of a correction.
They already have had a correction.
Yeah.
A big correction. They've been correcting for a while.
Yeah.
Right?
Still going.
They've been correcting for a while, but there's some good news if you've got apartments in Sydney and Melbourne. And the good news is that we've got a shortfall of dwellings, which are going to be caused by net overseas migration.
Yes, so the border's opened up now and we've got overseas migration happening.
Yep. So what's going to happen is we're going to end up with about 235 to 250,000 people per year coming to Australia.
Yeah, wow. And they're going to need somewhere to live.
Yes, but not all of them.
Well, they're going to live in tents.
Yes, they're going to be living on Christmas Island. No, I'm joking. That is a terrible joke. Some people get caught there, unfortunately. But no, what happens is out of every 3 people that move to Australia,
you need one house.
One dwelling. That's right. One dwelling.
Because kids can't buy their own house. They're under 18.
No, they can't. They can't. Unless they join our program with their parents.
Yes, we do have some very young investors on our program, I must say.
Yep. So over the next 40 years, they expect us to gain 13.1 million people.
Wow, that is massive.
So they reckon our population is going to be 38.8 million.
Yeah, well, Australia does need a population growth. Like, hasn't our population been sort of going steady or if not declining?
Yes, our internal has been declining. Now, this is the deal. You know what that means? That means the next 40 years, we're going to add a Sydney, a Melbourne, and a Brisbane.
Bring it on.
Is that amazing?
Hoping Adelaide can finally catch up.
Oh, you never know. We'll see what happens with this
Please,
election.
government, get your shit together. No, I love the traffic situation we've got. I like that, we haven't got a lot happening here, so there's not a lot of cars on the road.
No, but also where we live, there's no parking, so no one's here ever.
That's true.
So the vacancy data for January has come down, and our vacancy rate in Australia, even though we had no migration, has gone down to a 16-year low.
Wow.
Right? So we're just packed to the rafters. The fact of it is we just don't have enough properties at all.
We need more properties.
Yeah.
It's as simple as that.
So the deal is a lot of people are scared from the Russian-Ukraine war, and a lot of people going, oh no, property. And this happened during COVID, remember?
Yeah,
so
same
during COVID,
thing.
And every time something happens, everyone's like, oh my God.
Same thing, different day. That's right.
And the thing is, Christina, how many times have we seen this?
Mm-hmm.
Right? We've seen
So
it
everyone holds back from putting their properties on the market.
or buying property.
There's a massive rebound effect.
Yes, but people are too scared to buy, and they've always got an excuse. Oh no, COVID. Oh no, Russian-Ukraine war. Next thing, global
There's always
warming.
going to be something.
There's always going to be something in the news trying to scare you.
That's right.
Right? The news, they say.
How do you think they sell the newspapers? How do they get people addicted to watching the news and all this negative stuff coming out? It doesn't matter. It's going to keep happening.
Yeah, and the fact
Meanwhile, you could actually be making money out of your investment properties. Hello.
Yeah, and what's happening, I get this all the time. People go, oh, do I wait to get into the property market? And, this is the answer to that. No, you buy property, then you wait.
Then you wait. That's exactly right.
So many people got it wrong. So many people what they think is let's wait and then get into property. But see, while you're waiting, how much money are you making out of property?
Zero.
So you
But
buy
meanwhile,
property.
you're actually losing money if you've got money sitting in the bank because interest rates keep going down, property prices keep going up. You're not even keeping up with inflation.
That's right. So the fact of it is, they got it all wrong. People that think they can wait and get into property, they've got it completely wrong, and they've got to turn it around.
It's a lesson they maybe need to learn. If they've
Yeah,
got
but
that
you know what? What a better
They'll be
idea
looking
is.
back and telling their 20-year-old self or their 30-year-old self, should have brought more property. That's exactly what will be happening.
Well, you saw those comments in our Facebook, and most people said should have bought more property.
There
And
you go.
I say to my 20-year-old self, buy more property. Get in there and buy it. If I had a time machine, that'd be great.
Absolutely.
Yeah. So that's what's happening, right? So consumer confidence has gone down.
Yes, well, that's not surprising.
Business confidence has gone up.
Yep.
Now, I don't know if I mentioned this last time about trade balance.
I think you touched on it, but say what you're going to say anyway.
We are very positive, looking good. We're kicking ass.
Cool.
Yep.
Trade balance is a positive thing.
Yeah, exactly. That's right. Exactly. Now, last week we spoke about the fuel and everything. This week we're talking more about, other stuff like that.
Yes.
Yeah. So asset protection.
What we've been waiting for, how to
Protecting-
bulletproof your assets.
That's right.
Look, there's no point in building an empire unless you're going to protect it properly. You need
That's
to
right.
protect your empire.
Now, this is the deal, though. When you do asset protection, you got to get it right.
Yes.
This is the one thing you can't muck around and do it half-assed. There's companies on the internet in Australia charging a lot of money to do asset protection, but they're missing two vital steps. I've looked at their program because a few of our members actually emailed me through.
Mhm.
Now, I don't want to mention the company name, whatever, but they emailed me through. It's $10,200 to do this program.
Wow.
And look, that's okay if you're covered. If it
If
covers
it
your
does everything you need, absolutely.
the
That's
price is okay, but if
cheap
it
price to pay for protecting, $10 million worth of assets.
or whatever, but you know what? Especially when you can use it for the rest of your life.
Exactly.
But if it doesn't work, what is it worth? Zero. So even if you pay $10 for it, it's actually not worth it.
Yeah.
So if you're going to buy an umbrella to keep you, rainproof, you've got to bet an umbrella without holes in it. Even if an umbrella's got no cover on it and doesn't cover you at all, doesn't matter what price you pay for it.
I'm just picturing an umbrella now with just the wires coming
Yes.
down.
And that's what most asset protection is, an umbrella with just the wires. And
That's
that's the worst.
That's not real protection.
No, well, actually, it gives you this, it's really worse than not being protected, because if you think you're protected and you're not,
Yes, you might not realize.
that's a lot worse than knowing you're not protected, if you know what I mean.
Yes.
Yeah. So people have gone on this program, thought they were protected, cruising around, being cocky, and guess what happened? They lost everything.
Oh my God.
They lost everything.
That's
They
even
thought-
worse because they thought they had the asset protection that they needed for their
Yes,
portfolio.
which actually because of that protection, they did certain things they wouldn't have done otherwise.
Right. So it made them take a few more risks and
That's right.
right.
So
Okay.
that's why that's pretty dangerous,
Yeah.
very dangerous. So you've got to get it right. The problem is, you've got an accountant, you've got a lawyer, you've got a tax specialist, and getting them all communicating and doing the same thing and getting everything right is very difficult because
Yeah.
the challenge
Getting
is-
them all on the same page.
But not only that, because you've got two things: you've got asset protection, you've got tax.
Yes.
Two separate strategies, right? And then you've got the ease of use of what's happening. So what happens is, if everyone's on a different page, then the accountant's going to go, well, we didn't do this for tax. But then the tax
I
law
was
is-
going to say, and some people have got their own agenda, like one of those professionals might go, have their own ideas and go, well, you should be doing it all this way. But then you might have like the accountant who is doing the opposite to whatever your tax lawyer is doing. And they've both got their own ideas and they both might be great, but you need to do what's best for your specific situation.
That's right, exactly. And the thing is, there are certain ways of doing things that work. And what I like to do is I like to model what works.
Yeah. Hello.
Like
Try to test it for a reason.
Property. So what I do is I know this footballer who got asset protection.
Mm-hmm.
And then he went around buying all these businesses. Went nuts. And a lot of footballers do that because they've got so much cash.
Right.
And then his business all went broke because he didn't know what he was doing. He was good at football, lots of cash.
Not so good at business. He should have stuck to football.
Anyway, he went bankrupt, but luckily he protected his house, which was worth like 3 million, his cars, all the assets. And guess what? They couldn't touch anything.
So he had an asset protection that actually worked.
Yes, he did it right. He did the final 2 steps because
thankfully.
What people do is they get the trusts and get all this other stuff happening. But there's a lot of finer details when it comes to these things. And there's got to be some transactions and some other things that you need done to make sure they work. Because a contract is not valid unless there's some consideration paid.
Right.
Right? So something needs to transfer. So you can write a contract and say, okay, I'm going to asset protect this property I've got, set up a vesting trust or a bloodline trust or a testament trust, one of those 3. But then nothing changes hands. And then you go to court and they go, okay, where's the evidence that you actually did this? It was real. You're like, well, I've got the trust deed. They're like, well, that doesn't mean anything because nothing's happened. So you need proof, right?
Sounds pretty complicated. I'm hoping Adrian can sort of shed some light because I have a lot of members asking about bloodline trusts and all those sorts of things. So we can get some good answers to those questions tonight. That'd be amazing.
Well, what I'm doing is we're putting, Adrian and I and the accountant, Mike, we're putting together a very tight asset protection system.
Fantastic.
For our members so they can just go in and do it all and be done.
Yep, and be protected, protect their empire.
Be protected. Then what we do is just review it every time they get more assets and just rinse and repeat, rinse and repeat, rinse and repeat. And we're going to have the checklist to make sure we go through it, get someone to review it after it's done and make sure it fulfills all the requirements and everything else like that. And then everyone's contracted.
Make sure it ticks all the boxes. Awesome.
Yeah.
Beautiful.
What are you drinking, George? Someone said, what are you drinking, George? You need to read this. You need to read
Doesn't look like he's drinking anything at the moment. He's not even holding a cup. I was drinking a coffee before. Oh, you are? You're drinking some sort of water.
No. It's pure blonde.
Okay. I'm wrong. It was an apple cider.
Pure blonde or organic cider. That's what I'm drinking. If you can read the other questions that we've got anyway.
Sounds good. I've got a car to protect. Good on you.
You can read those because I'm going to just make sure.
Someone's asking about Perth.
Yeah, what are they asking?
Is it in Perth? Is this in Perth? I'm guessing back when we were talking about Wes going to Boom, you were talking about how Melbourne and Sydney are at the peak.
Perth, Brisbane, Adelaide. But the thing is, with Australian cities, right, the one thing is you can have one suburb that's in the dumps and next door suburb that's booming because of the demand-supply ratio. So you've got to really, and I was saying this for Martin North the other day, you really got to pay attention and make sure you get it right. I don't know if I announced that I'm doing a new show on Channel 10.
Build to buy.
Buy to build.
Buy to build. I was close.
Yep. So,
congratulations, George. Fantastic. When are you starring on Channel 10 in this show?
We're just finalising negotiations.
Awesome.
So I reckon we'll be starting filming next few weeks, which will be great.
Very exciting. Are you flying to Sydney for that?
Flying to Melbourne, actually.
Oh, Melbourne.
Yes. So while I'm there, I'm going to catch up with all our Melbourne members.
Awesome. I think we're having a bit of a catch-up in Adelaide fairly soon as well.
We are.
Cool. Well, we'll keep you posted for that one.
Well, that's in our private group.
Yeah, that's why I said we'll keep you posted.
Exactly. So our members are catching up with us. We're going to hang out, have some food, some drinks and stuff like that, which is going to be fun.
That's right. Awesome. So we've got our private SHERP happening very soon. Was Adrian going to join us at all for the Facebook Live session?
I thought he was. I'll see what happens. We're going to have a bit of a chat and see what we do, and we'll find out what's happening.
We'd like to get him on, even if it's just for 10 minutes or so, just to introduce himself, say what he's all about, and see what's happening.
Okay, well, I'll send him a text now.
Yeah, sounds good. Awesome. Who's excited about this asset protection, guys? Just type in the chat, let us know. Put hashtag protect my empire if you're interested, if you want to know more information, because I get asked a lot of questions about this sort of stuff. Everyone wants to know, should they be buying a property in their personal name? Should they be buying in a trust? Should they be buying in a bloodline trust because you've got kids? I mean, there's so many nuances to all of this when you start to pull back the curtain and really discover what it's all about.
Exactly. Look, I think at the end of the day, like you said, if you're building an empire, you need to protect yourself. It's very important.
100%.
I mean, you look at what's happening now with those Russian oligarchs.
Yeah, what happened? Tell us.
Well, okay, so what's happening is part of the sanctions is all these Russian oligarchs, all these billionaires. The West is taking their yachts and all their possessions and things like that. So what a lot of them are doing now, like, for example, Abramovich, right? Abramovich is a Russian citizen, but he's also got citizenship in Portugal and also in Israel. So what he's done, he's got several citizenships to keep himself safe in case one country decides to shut down his passport. Then what a lot of these oligarchs have done is they've moved their yachts to the Maldives, which has got no extradition treaty with US. So that way they can keep them there and no one can take it off them. I mean, some of these yachts are worth like $900 million and they cost $180 million a year just to maintain.
Yeah, wow. That's insane.
Exactly.
We've got a lot of people looking forward to hearing more about, how to protect their empire, how to protect their assets.
Absolutely.
I'm really excited for this.
Well, look, the deal is it's very expensive to do because you've got to pay a lawyer, $350, $450 an hour to sit there, go through it, then negotiate with your tax, with your accountant and everything else like that. So that's why I'm going to get a group of people together, nut it all out, pay for it all, so then we don't have to repeat the expenses over and over, and just do the other bit at the end.
Fantastic. Big Kev is here. He's excited. Awesome. Thanks for joining us tonight.
Hello, Big Kev. My name's Big Kev, and I'm excited.
Awesome. Fantastic. Cool stuff, guys. Beautiful. Well,
Okay,
look, there's a lot involved with it. So we'll get into everything that's involved around how to set things up, setting up trusts, companies, structures, whatever you need to do.
How long have we got?
Well, we've got about 15 minutes left just in this session.
Well, what I was going to do is I was going to share my Google
Okay.
for a bit of a laugh and show you what happens when you Google George Markowski.
Okay. You're going to share your Google.
Because if you type in George Markowski, I don't know if everyone's done this. Look at this, George Michael, George Clooney. They're a lot more famous than me. And then as soon as I put MAR, there I am, George Markowski, author. So if I finish this, look at the first thing that comes up.
George Markowski wife.
And then George Markowski reviews, George Markowski net worth, George
Click
Markowski.
on George Markowski wife. I want to see what comes up.
Okay, let's have a look.
There I am. Puppy.
So what here? George Markowski surprises his wife with a puppy. Again, with a puppy. The big proposal. Surprise my wife with a car. Meet George Markowski.
That's pretty awesome.
The real life Monopoly man.
Awesome.
So what's this? How to buy investment properties in real life. Here we go. Then we got this investor smart property investment.
Christina gets a lot of surprises. I certainly do. But I got George back just recently. I surprised him with a 50th birthday party, which was amazing. So I hired the best boat in Adelaide, a 58-foot yacht. We got the oyster bar to cater it, and I got all of his friends and family together, and we all surprised him on the boat, and we had a big party. It was amazing, a lot of fun. So he surprises me, but I surprise him back.
Okay. My wife asked me the questions. Podcast, 5 steps to invest in property. My net worth. What am I worth? I'm very curious.
I'm curious too.
Let's have a look. $300,000. Wow.
Jeez, not a lot. What happened?
Oh, I don't know. Whoever wrote that net worth has got it wrong. I mean, I made $1 million last year just out of passive income. So
that might have been about 50 years ago, your net worth.
Good Koski net worth.
Oh, you're only 51, so that'd have to be at least 40 years ago.
Okay. This one says I'm worth 700,000.
Okay, there we go.
We're getting there.
Getting higher.
Adelaide Property Guru. Pretty cool. They call me the Property Guru there.
Should never do anything without getting the right info first. Yes, absolutely. That's what we're here to do. Look, we're here to get educated at the end of the day. That's why we put on these Facebook Live sessions. That's why we've got our community, our group of like-minded investors. You know, we've all got the same goals in life. We want to create a passive income through property. And it's just about getting educated, because the more you get educated, the more we can empower you, the more successful we're all going to be. And you're going to get that education and be able to take it and turn it into passive income, get your goals in life.
Aha. So when you type in George Makoski net worth, guess who comes up? Robert Kiyosaki.
Robert Kiyosaki, because we've recently done an event with Robert Kiyosaki, Mr. Kiyosaki himself. He loves George. He loves talking property.
Yep, exactly. So I thought
We're
that'd
getting
be interesting.
educated by the best. Well, thank you very much. Thank you. Thank you
Now,
kindly.
I've got a new announcement as well.
What's
We've
your
got a
announcement?
new audiobook.
Woohoo! We've been waiting for this. It's been the long-awaited audiobook, Freedom Through Property, bestseller. Amazing
Yeah.
stuff.
Audible. No, can't find it. Need to talk to my team and find out where it is.
We've almost got an audiobook, so
We have.
stand by
but,
for magic.
we've got the book, but not the audiobook. I don't know why.
We just need to get the links all sorted.
Okay, what's this here? What does this say here?
We definitely got it up there on Amazon.
No, just Kindle and paperback. Oh, well, there we go. I'll stop sharing, but there you go. But the audiobook, I'd like to get a link to it. If my team give me a link, that'd be great.
How long does it normally take to get a property with you? Look, it really depends on your situation, because I don't know where you're at, if you need to save up a deposit, if you've got equity, if you're ready to go, if you've got pre-approval in place. There's a lot of nuances here. So the best thing to do would be to connect with my team and have a chat to someone who can actually see where you're at and then help you get on to the next step.
Why do you, if you type in hashtag wealth call, one of our team will see that and they'll give you a link.
Absolutely. You need to have a chat with someone, a one-on-one chat with a property coach to explain your situation, where you're at individually, and then they'll be able to guide you with how quickly you can get your first investment property, which is very exciting.
The point is, I suppose, you don't want to be too much rush when getting property. You want to make sure you get it right. My philosophy is take your time, get your numbers right, make sure you're comfortable, and then do it. A lot of people,
absolutely, but you've got to get
FOMO
forward and get that momentum.
Yeah, a lot of people get FOMO and they jump in too fast just because they've been, not doing it for long enough. But you need to just take your time to do it right. It's not about.
They look and they go, wow, I did nothing for the past 10, 15 years where I should have been buying at least one property every year. And now they're like, crap, oh my God, I need to buy property, and they're desperate, so they want to get like 5 in 1 year to make up for what they didn't do. But I'm like, okay, let's just take one step at a time. Rome wasn't built in a day.
No, exactly. It wasn't. And that's the whole
You got to
point.
start with one and go from there.
Exactly.
You got to walk before you can run.
Yep, you do. So Adrian should be joining us in about 1 minute.
Oh, fantastic. So he's going to jump on for the last 8 minutes of the Facebook.
Yeah, just a quick hello, have a bit of a chat about what's happening, because there's a new law coming out when it comes to trusts.
Oh, do you know anything about this new law?
That's why I asked Adrian to come on to explain.
That's why we're going to get Adrian to tell us about it, because he knows all about it.
Exactly.
Is it going to be good or bad? It's probably going to be they're tightening
There
up.
we go. We've got Adrian here right now. I'm going to get him on board. And look at this. There's 3 of us. Hi,
Hello, Adrian. Welcome.
Hey guys,
to tonight's session.
thank you for having me along, guys. Pleased to be on your show again.
Excellent.
Well, welcome back.
Now, Adrian.
Sorry, go.
Well, I saw this thing recently where the government is attacking trusts again for mums and dads investors.
Yep.
And I just wanted to get a little bit of clarity for our group and what's happening there.
Yeah, so the ATO has hated trusts for decades, and the reason is because you can legitimately save large amounts of tax using trusts.
Mm-hmm.
People use trusts for asset protection. They use them to save tax, and that is envisaged by the Tax Act, and you're meant to be able to do this. So with a discretionary trust, what you're able to do is instead of like I hold something for you and it's definitely yours, a discretionary trust, I get to pick who I send income to every year. And so I can pick who has the lowest income and therefore tax rates and send the money to them. So I can, by making that choice every year, I can reduce my tax. But it's really, the only way you can do that is actually if you have like a business or you have a passive asset like property. So you can't do it like if you're just a PAYG earner, if you're on a salary, it's stuck on you.
Mm-hmm. Yeah, exactly. And I suppose, look, being a PAYG puts you in a position where, it's very hard to get tax deductions, almost impossible unless you're really losing money in real life. And that's part of the reason, Robert Kiyosaki and I have joined force to show people how the rich do it by actually losing money on paper, not in real life. Because Robert Kiyosaki recently came on and said, hey, I want to ban negative gearing in Australia. And then Channel 9 interviewed me the other day and said, George, you want to ban negative gearing? And I said, we don't want to ban negative gearing. We want to ban people using it the wrong way and losing money. What we want to do is use the right way, because negative gearing is a very powerful tool. But if you don't know what you're doing, all you're doing is losing money. And 2/3 of Australians that invest in property lose money every week. And that's because they don't know how to do it.
Yeah, absolutely. As a tax lawyer, what I do is I help people save money now, or fix disputes with the tax office. Mm-hmm. Now, the people, and I've saved people from tens of thousands to like tens of millions of dollars worth of tax. Now, almost none of my clients are on a salary. And people say to me, oh, look, I'm on a salary. What can I do? I'm like, look, I'm a tax lawyer. I know a lot about tax. Nothing. Like, just you're stuffed. You can maybe claim $300 on a laundry deduction, maybe some self-education expenses. You've got to have something like property. You've got to have, your own business. You've got, if you're doing something, economically really valuable like that, and separate to you just running a job, just having a job, then there's all sorts of cool stuff you can do. Can use trust. Yes. Yeah, we can use trust, we can use companies, we can use negative gearing, we can and this isn't even just touching the surface.
Absolutely. So Adrian, what you're saying is, if you look at the cash flow quadrant, we've got E for employee, S for self-employed, B for business owner, I for investor. And if you're in that E category, what you need to do is get some property investment in the I category, and then suddenly you're getting I category tax deductions instead of the measly tax deductions you get as an E, because the E category tax deductions are really the crumbs that fall off the table, right? And that's the problem. That's all they are, little crumbs here and there that don't make any difference. But what you want really is to get on that table and eat the other investors and business owners and get the big tax deductions. And that's what all the loopholes and things have been made.
So people call them loopholes. They're more like legitimate reasons, like with legitimate designs of the tax system. For example, if you sell property, an investment property, and you've held it for more than 12 months, you get that income, that gain is reduced by 50%. Now that's Division 115. It specifically gives you that exemption. Now, is that a loophole? It's like, no, you're meant to have that.
Yes.
If you sell a business, you can. There are small business Cgt concessions that can reduce your income, like your profits by, like your gain by a further 50%, or contribute it to super, and it gets removed entirely. If you had it for more than 15 years, you can pay no tax whatsoever. Now that's not like, in a way that's a loophole. In a way that's like the Parliament intended for you not to pay tax in that scenario.
Exactly. And look, they're there for a reason. They're there to encourage you to do certain things.
Absolutely. Yeah.
And for example, negative gearing is there to encourage you to supply housing. We actually got a housing shortage, massive one, and it's going to get worse. And basically, negative gearing is there to make sure that over the next 40 years, when we're getting another 13 million people that are going to be added to our population, they've got somewhere to live.
Yeah, totally. So, negative gearing is actually a tax fairness thing. So, if you're making a loss, so if you're running a business and you're making a loss on that business, you can offset that against profits in a different business. One of the things that we're looking at with the trusts is about distributing income from one entity to another, and so it's moving it around from like a trust to a company, trust to another trust to an individual, and so you're offsetting profits somewhere against losses somewhere else, or lower or less profits or lower tax rates somewhere else, and so being able to move things around and offset them is actually a fundamental part of our tax system, and that's how negative gearing works. It's about you're making a loss on one part of your income and you're offsetting that. Now you can't actually do that with all, like if you're running a big business, you can, and your business is making a loss, you can offset that against your income. But actually, if you're running a small business, it can actually be difficult. So just say you started up you're talking about the cash flow quadrant, and we have employees, self-employed. So someone who's self-employed, they're running a coffee shop, or a gardening business, and they're making a loss. It's a side hustle, and there's a loss against their employment income. You may not be able to deduct that. So you might, unless you've got either a large amount of capital involved, you make profits in 3 out of 5 years. You've got sufficient turnover, more than $100,000 turnover. So there's a lot of plant and equipment involved. So there's rules for like non-commercial businesses, whereas there aren't those rules for negative gearing.
No, and look, the other thing is there's a lot of people talking about Bitcoin, and the thing is a lot of people don't realize that about the tax implications of Bitcoin are very different to property. So we've got members of our program this year that have bought property and they've made $100,000, $200,000, $300,000. And even though they've made that money, because we're depreciating, we're actually made a loss on their income, even though they've made $200,000 or $300,000 in equity. Now, but if you did that in Bitcoin, and let's say you made $200,000 in Bitcoin over the last 6 months, how would that affect you? It'd be very different, wouldn't it?
So one of the problems is that with cryptocurrency, people very rarely buy and hold. Most people who own crypto are constantly trading it. They buy, sell. And so what that means is that they are disposing of their assets, even though they've got, a constant amount of crypto. Maybe they sell their Bitcoin and they buy Ethereum, or they buy Dogecoin, they buy, Doge Moon coin, or they're buying and selling things means that there's a disposal. And where I've seen a number of people have difficulty is they're buying Bitcoin, they sell it, when it's at like $80,000, they get $80,000, they invest in some other crypto. Now they've just made a huge capital gain from say like $20,000 to $80,000. That's great, but then they buy Ethereum, say, and then that Ethereum goes down from $80,000 to $20,000. You go, wait a second, you started at 20, went up to 80, back down to 20. It's all even. Well, actually, from a tax perspective, you've made a $60,000 capital gain. And you have to pay tax on that.
Yeah, I was going to say that
How
have to pay
crazy
tax
is
on all
that?
the profit that they make, essentially. So
No, but they didn't make any money in real life.
doesn't matter. It's not the way the tax department sees it.
Yeah, no. And so, particularly with like the big slide in Bitcoin, like and crypto this year, I'm really expecting a lot of people with that problem. I've seen it in past years. Actually, I have I do a lot of work in crypto, and I've just finished a big paper on this. That, and in my view, crypto is not property. And so I actually think that the tax department is entirely taxing cryptocurrency wrong. Now, that's not for you to challenge unless you've just lost, come up with a $200,000 tax debt, like in that scenario. If you owe the tax office, $500,000 or something, then I have a really good method for you to get out of that. If you go, well, I've just been hit with $10,000, it's not worth fighting.
Exactly. If it's big enough, then it's worth fighting, definitely.
Yeah, 100%. but for people, there are lots of people who just are not complying, and unless you've got heaps of money and you've got a really, really, really clever idea, the tax office will roll you. You have to follow what they're saying, and it's with such a volatile asset. It goes up, goes down, bam, you've just crystallized a huge gain, and a whole bunch of problems for yourself.
Actually, I'm curious about this. I'm wondering.
Well, guys, I'm going to head on over to our private SHRP session.
Okay, we'll see you there in a minute.
You'll be joining us very shortly.
Yeah, shortly.
Lovely to see you, Adrian. I'll see you in 3 minutes.
Thank you, Christina.
She's tough, isn't she?
Yeah.
See you later.
See you, Christina. I was thinking about actually accepting Bitcoin for our program. So I'm wondering how that would work. If anyone's listening, type in the chat if you'd like to buy something like this on Bitcoin. I'm very curious about that to see, if it's worth setting up or not. So if someone says that. Now, what we're doing is in about 3 minutes, we're going to be going into our inner circle. This is our paid membership. And this is where we're going to go into the nitty gritty and explain the new tax rules and what's been happening with the new trusts and how the government what they want to do and how we're going to find our way around it legally. Yeah. And that's the whole point. And that's why we got you on board, Adrian, because you're a genius when it comes to that. You're brilliant. And also, I was explaining to everyone that we're launching a new asset protection program later in this year, because there's a lot of people out there doing asset protection that have got it wrong. And
absolutely.
There's one company in particular that's selling their program for $10,200. They're saying it's the complete thing. And people have bought this thinking they're safe, but they've missed the last 2 steps. So they've done all the first few steps. They missed the last 2, the most important ones, as you and I know, which we're going to explain next. And then what's happened, there were a few people that thought they were bulletproof, and now they've lost everything.
Yeah.
Completely.
It's really unfortunate. So I help lots of people both at that asset protection stage, but also when these structures are coming under attack, and the thing that you're talking about, and then we can talk more about in the SHRP session, is I really struggle to think that it would stand up to rigorous attack.
That's right. And the thing is, if you want someone to protect you, have someone that's actually been in the trenches and fought this war, like yourself, Adrian. You've done this. You've fought this war a few times, number of times, and you know how they attack and how to counter. But people that just do this, they go on the internet and go, oh, this is how you do asset protection. We're going to sell this program. But they don't actually know how to do it themselves. They've never been in the trenches. If someone that doesn't actually have the runs on the board in real life, you shouldn't be taking their advice.
No. And particularly when someone comes up with some kind of strange trust law. I'm a specialist in tax and trusts and technology, and so when I see someone say, I look on the internet, and now to me, when someone says something that's legally dubious, it's like, well, it's really obvious to me. Well, what's really dangerous is that when unless you're a specialist in trusts, something sounds cool, and so unless you're working with people that you know and you can trust and know what they're doing. It's really sad when I get people led astray. I'm actually dealing with some matters at the moment that involve, tens of millions of dollars worth of defrauding of people who have been sucked into bogus asset protection.
Really?
Not only were they sold an asset protection product that didn't work, but the people who did it are using it as an opportunity to steal from them.
Wow. That's terrible.
So-
So you got to be careful. I think really at the end of the day, whenever you're looking for a professional to do anything for you, make sure they've actually done it themselves in real life. They've got the runs of the board. They've helped other people. You need to do your research, definitely. And that's why we've got Adrian, because I've known Adrian for a long time. He's done a lot of work on a lot of our members, and everyone's been very happy. And you've kicked ass, so it's been good.
Thank you, George.
Excellent. Now we've got our members waiting on our next program. Guys, thank you so much for joining us. I really appreciate it all. Remember, every Thursday we're here live. I'm excited. Next Thursday we've got a great show for you. So thanks for watching, and like, share, comment. See you next week. Cheers.
Thank you, guys.